the innovation, the offerings that are coming up. But despite this advancement, there remains a significant digital divide. Beyond what Patricia talks about, you have the rural-urban divide. You have, even within Africa, the very developed and not too developed. Why are we not doing what the likes of India and China are doing? And the uneven distribution of digital resources and capabilities is responsible for this divide at every level. Within the continent are disparities at all levels. Certain countries have seen a surge in digital infrastructure and services, whilst others are lagging behind. We have the urban, in some urban areas, as again, if you look at the fact that about 60% are covered and are not using it, and then you have only 25% using it. Even within the urban areas, you have a divide in there. You have the rural-urban divide. Then you also have the gender gap that is all staring us in the face. So how are we going to be able to deal with that? And so to do that, I have a panel of 2 ladies and 3 gentlemen. And we're going to look into the crystal ball. That's what we're going to do. And so I'll ask all of them to introduce themselves. Starting from Andrew first. He would tell us about himself and a bit about what his company is doing so far as this, the issue that we're about to discuss today is. So Andrew.
Thank you, Engineer. Good morning, everybody. Happy to be here again. And wonderful conference. So my name is Andrew, as he's mentioned. I actually am the co-founder of ZPay. ZPay is a fintech-led mobile money company, and we specialize in remittances to wallet. Our burden is to make sure that remittances will be received seamlessly across Africa, and our objective is to be able to do this across the continent. Thank you.
Right. So Lee.
Yeah, good morning. I hope it's still morning. My name is Lee Maina. I'm a Chief Solution Architect for Mobile Money and Financial Services at Huawei, basically rolling out mobile money across Africa. I do believe we serve more than 50% of the global traffic when it comes to mobile money and fintech. And these are experiences that we do endeavor to basically bring into projects whenever we roll them out. So it's a pleasure to be here and excited to be part of this panel.
Right. So Ethel.
Hello, my name is Ethel Cofie. I am CEO of Ethel Technology Consulting. We work at C-level with boards in just strategic design of technology and product roadmaps. My other hat is I am founder of Women in Tech Africa, the largest women in tech group on the continent, about 5,000 women across 30 countries, including the diaspora. So we've got a couple of other countries in there. And then the last, I suppose, hat, which is relevant to this context, is I chair the private sector board that advises on technical and vocational education, especially on the ICT sector.
Thanks, Ethel. So Dario.
Yes, good morning, actually. So my name is Dario Bianchi. Actually, as you say here, Dario Bianchi, but it should be Bianchi. I'm the Chief Digital Officer at MTN here in Ghana, so I look after all the digital channels, content, video, music, and the new exciting things, so the new platforms like Ayoba, Chinosis, and a few of these other things. So thank you for the invitation. Looking forward to a great panel.
Thanks. So Rashida.
Yes, please. Oh, hi. Good morning, everyone. My name is Rashida Musa. I am the CEO and founder of Rayma. We are a leading AI integration firm. We help professionals and corporations improve their operational processes with strategic AI implementation. And we use education as the vehicle for this adoption through workshops, seminars, and training with individual teams and professionals. And yes, I'm grateful to be here today. Thank you.
Thank you very much, Aja. So to start, Ethel and Dario, I want to start with you. So how are fintech innovation, AI, and other digital technologies, how can they be leveraged to bridge the digital gap across Africa? Looking at the barriers to entry and adoption, what do we really need to do to navigate as we look into the future?
Ladies first.
Well, I said this a couple of times and I'll probably repeat it again. I think that the question of bridging the digital divide, sometimes we get bogged down with we need internet and access. And I think sometimes, and this is my personal opinion, that we need to stand outside of it a little bit. And if we are going to provide even just government access to government services, I like to start with the idea of being able to provide government services by digital to the populace, because one, it trains the populace, urban, peri-urban, rural, on how to use digital to meet their needs. If we start as simple as using USSD, and I'll keep saying it, if we start as simple as using USSD to enable people to access government information, be able to pay taxes, be able to do the things that they need to do, then essentially we are providing the services before internet arrives. That's my big thing. We worry too much about getting everything right and all the ducks aligned. And if we can use what we're currently using, USSD, things they already use to provide them services, then you train them. And you also train them for the startups who will then bring the services to them. For me, that's the one big thing that we could do to essentially bridge that divide while we fix everything around the cost of internet and that sort of thing.
Right. Dario?
So yeah, and I want to start with, at MTN, our purpose is, we believe that everyone deserves the benefit of a modern connected life. So actually I think that the title of the panel you copied from MTN, because it's very similar. So we really believe that everybody can do more with digital. And yes, USSD of course is a channel, but I want to say something controversial that I also said it last year in another panel, and I got in trouble. I will say it again anyway, that yes, USSD is great, but we need to move customers to digital. We need to get customers to use web solutions, app solutions, because they can provide much more than just USSD. And I think in the previous panel we were talking about people that maybe have different abilities, and you can't use USSD if you're blind or if you can't read. So we need to find a way using AI and using digital to bring more people to fintech and to digital. In MTN recently we are doing some work with a community of visually impaired customers to redesign My MTN so that they can use it. And AI can help a lot with this. The other part that I also want to mention is that in fintech, and again, there was some panel yesterday, they say the same, is that we are still scratching the surface. There are still so many opportunities. And one of the innovations that I guess in the next few years will become, that is not an innovation anymore, but will become more relevant are the APIs. So how we can get any business to really start using mobile money or fintech to collect their revenues and to generate more income. Social commerce is something that is big in Africa and big in Ghana. What if they can simply connect to our APIs and start collecting revenues, and everything is seamless and easy to use? So there are, I think, a lot of things that we can do, but again, I will say it again, we need to move beyond USSD.
Right. Thanks very much. So Lee, let me come to you. So how can we ensure that the benefits that both Ethel and Dario talks about of digital financial services and which you provide for reach the underserved and unbanked population? If you look at the last fintech report that came, there is still a large track. Even in Ghana, we still have about some 17% that we really need to deal with. And you find out that these people are very difficult to get. So how do we leverage on all these new tools that are coming to be able to reach them, taking our context in Africa into consideration?
Thank you for that question, and it's one that I'm actually very passionate about because, as mentioned, I've pretty much been at the center of rolling out mobile money, even in rural villages when even cars do not go. And honestly, there's no silver bullet. It requires a concerted, multi-sector drive or effort for us to be able to achieve this. And when I say that, it's not just about, improving access, and access can be boiled down into two things. There is the infrastructure side, which again, like we did mention, we need to move everyone to digital, as Dario has mentioned. But again, the core infrastructure to support this is actually missing in those rural areas. And we also need to appreciate that sometimes the private sector might not have the flexibility to roll out that infrastructure beyond where it's perceived to be profitable. So the key thing is that we need to see then, how do we buffer this? How do we create, again, a multi-sector team that involves government, donors, NGOs, telcos, including also OEMs, right? Because it's not just about access of this, internet and everything, but it's also about cheap devices or affordable devices that will bring these customers closer to digital. And like Dario said, and this is something that I must emphasize, we must think beyond USSD. What we did realize in Kenya in Safaricom actually is that when we moved the merchant from USSD to their entry-level smartphone, immediately their transaction volumes grew 7-fold. Why? Because now they've digitized the whole entire business into one and moved away from physical ledger books. Now we begin to take them to digital. The other place is basically also on the service layer, access and also service layer. What we've seen, and I really do not want to regurgitate what most of the other speakers have said, is that we've overemphasized on accounts opening, wallets opening, and payments, right? And granted, yes, this has made fintech to be very ubiquitous. But on the other side, what has happened is that credit, savings, wealth management, insurance, all the way till basically a holistic financial wellness of the users remains unmet. And the only way to meet this, again, is simple, is that we know, and as mentioned by the previous panel, these other sectors require a lot of heavy lifting. Why? Because they're heavily reliant on data. And this data is either missing, or if it's available, it's fragmented across multiple startups and multiple companies. I just went into one of the sessions here, and I just saw everyone there is doing payments. Everyone is focusing on payments and e-wallets. So the question is, we really need to improve the landscape of data. And that the only way we can be able to do that, because this data does not exist, is again do the heavy lifting we do not want to do. And that means digitizing each and every sector, from agriculture, retail, et cetera, you name it. That's the only way we can be able to achieve that generation of that data. And there's always a role that government can always be able to play. What we've seen in a market such as Nigeria is that the government was very strict. There are some licenses to fintechs that are given on condition that your operational levels or your operational efforts have to be more than 25% in the rural areas. And that is instrumental in terms of driving that sort of investment outside the urban areas. Probably then, a very unpopular opinion, the same things that government has done to curtail so many players into betting as well as others, it's a question that begs an answer. Should we also do it for fintech? Yep. So that at least we've got also players who can now start thinking, if it's beyond payment and payment has already been utilized, how can we go into agri-tech? And then, of course, with government also comes incentives. So it's not just about regulation. We could also incentivize companies that are doing this, operating in the rural areas. I remember, again, borrowing experience from mobile money, is that the agents in the rural areas, we always seemed to tweak our systems to give them better commissions, etc., right? So they can survive. So that we need to do. Maybe tax breaks, maybe other things, which we give to companies which operate in those harsh environments. And then, of course, government can still be able to play a role beyond policy. And this is the final one, is that we've seen in a market such as Kenya, where the government is spearheading credit inclusion, because that's the primary way of enabling these customers. And what they've done is come up with a government-backed loan. And their key motive was quite simple, is that how do they reach and target these underserved, these unknowns, right? These customers that we all consider high risks because we do not have enough or sufficient data to credit profile them, and just reach them with affordable lending. And based on that, the more actively they participate within our ecosystems, we are able to credit score them, and then we are able to basically move them to a level that the private sector would be willing to now start serving them. So that's the short bit. Yeah.
Thanks, Lee. So Rashida, let me come to you. So in what way, can AI be integrated into our national strategies to accelerate this digital transformation across all levels of the economy, as Lee says, in Africa? Let's explore the broader role of AI in these national digital strategies, not just in fintech, but across various sectors, to foster a holistic approach to digital transformation that benefits all of us, including the specially abled.
Absolutely, that's a great question. I think when it comes to integrating into a national strategy, it's actually been done severally across the continent. We have Mauritius, we have Kenya, who developed a national AI strategy in 2018. We also have Egypt, who developed their national AI strategy in 2021. And they integrated artificial intelligence across various sectors, where be it agriculture, be it logistics, be it even just operational things that they were doing within the government structure themselves. Now, we also have a great example, our brothers and sisters next door, Nigeria. Nigeria has their national AI strategy, and what they're doing, a little bit different than these other countries, is they're making homegrown talent. They're kind of replicating what India did by going into the primary schools, and that's when they started to introduce these science topics. That's exactly what Nigeria is trying to do as well. They're trying to train 3 million tech talents across a variety of tech skills, so that once they're building, you can't say, let's build homegrown solutions for our people, but you're not using our people to do it. And sometimes, unfortunately, we just don't have enough of our people who are trained in these areas of technology. And now that is what Nigeria is trying to do. So I think as Ghanaians, we have a very large young population, and we need to mobilize them. We need to get them learning these skills, getting into these programs, making it much more accessible to them. But we also have to realize how expensive accessibility to the internet is. For someone in a village, they can't afford some of these data bundles. So the government needs to help these rural areas with even providing free internet centers, so that young people from these communities can come in and use it as I remember the public libraries in Canada and America, they have 1 hour time limit. You could totally establish something like that here, so that at least we give them access to the internet. A lot of people have to choose between data bundle or food. And when you have that decision, when you're eating hand to mouth every day, I'm sorry, getting involved in tech, being online is just not a priority.
Right. Thanks. So, Andrew, to close our first round, and this question when I'll let Ethel to also take a bite at it. And again, is to look at what a role government can play. So what are the key regulatory challenges in fostering, that we need to deal with in fostering robust fintech system that would unleash also the power of AI and other new technologies? And how can we address these regulatory challenges?
And thank you very much again. So I'm going to break it into three. So let's start from regulatory ecosystem, which is the fintechs and the community. If I even want to extend it to the wider fintech, so it might not necessarily be financial processor, but even a fulfillment that leverages fintech. And then let's look at it from also the end state of it. So from a challenge perspective and into solution, in regulation, we have three things. We have two things that matter. Conduct. The conduct aspect is actually the burden of the ecosystem. I think the firms should be responsible for conduct. That way we will solve the challenges of the ecosystem. So what do I mean by conduct? For example, making sure that we act in integrity, making sure that in integrity we have the right financial crime controls, we have the right onboarding controls or protocols, making sure that we have the right money laundering programs in place. If we did that, then the next thing is we come together as an ecosystem, and as an ecosystem have common standard protocols. So from a consumer perspective, how do we ensure that consumer behavior is optimal? Through common standard protocols. Making sure we have common terms agreement on how we work with each other. Data sharing, my colleague talked about data sharing. So if we do these things, then we're helping build the ecosystem from the reverse. And we're taking that burden off the regulator. Then on the regulatory side, I think there are two critical things that the regulator should do. The first thing, obviously, is to lay out the objectives of the regulation. Be it fintech, be it AI, whatever it is. laying out the objectives also almost makes it seamless in implementation. I think in the case of Ghana, we've been fortunate that our Payment Systems Act almost pretty much lays out that objective. The second thing that's very critical is then to make sure that we have the oversight. Now, oversight, I'll break it into two: the control function, and then of course the non-control function. So in terms of control function, making sure we have the right compliance protocols in place. There are some layers of compliance that should come from the regulator into an ecosystem, and then there are some layers that the ecosystem will develop by itself. Then of course, if you take a risk, what is the control risk that from a regulatory standpoint is a no-no and is a yes? Then we embed that into ecosystem. I think if we did that, then we'll have a good marriage. That will solve the challenges that potentially will come up or exist in. At the same time, we'll foster the growth of the ecosystem. Now, if you talk about AI and how we can leverage AI, look, I mean, think about it carefully. Artificial intelligence is a necessary evil. It's a very powerful thing. We need it, but it can also destroy us. We can literally go to war from an AI. So how do we make sure that we're safe? I think we should start from a consumer standpoint. Consumer behavior should be the leveraging point. What do I mean by that? We should not put the cat before the wheel. Let's not come up with regulations for AI. Let's not come up with a policy framework right now. I think what we should do is design protocols around just consumer behavior and say, how do we make sure that consumer interactions from an AI perspective is safe and sound? If we did that as a test, we use that to get into market, understand AI more, and we can scale. You know, one of the panelists mentioned, gave an example of how AI can be used to scale an SME business. Before this, we would have used enterprise service bus. To use an ESB, your minimum deployment might cost you about $500 to $1 million, right? That ESB will give you all the analytics about the consumer's behavior. Today with AI, literally probably $10, you can have that information. But then at the same time, we've got to be careful in that deployment because you're exposing the customer. There has to be a certain layer of management of that exposure. And I think that's sort of the thinking we should be having. So I say we go from a consumer perspective and use it to develop the ecosystem. Put together, I think that's how regulatory ecosystem can come together to play.
Right. So Ethel, I would want you to take a bite of the same question. You know, what the key regulatory challenges that need to be dealt with, you know, to foster a robust fintech ecosystem that would also unleash the power of AI and all the new technologies we're talking about.
Just before I answer that, can I push back a little bit on
Please do.
USSD web conversation? Yes, you know what, I was going to counter it. I think in a market where a gigabyte of data is more than 1% of the average income of a country, we cannot be over-optimistic, right? So we must meet people where they are. And I understand that we must push for as much as we can, but also you come at it from a commercial perspective. When government gets their act together, they'll come at it from the altruistic perspective. But until then, let's work with what we have. Now, we'll move on to the regulatory challenges. I wrote a white paper about 3 weeks ago where I said, I was being a little provocative in that one, where I said, if you allowed MTN, Orange, I think they were top 3, the telcos that had the most number of opcos, to just do wallet-to-wallet cross-country freely, you would do more for the Africa Continental Free Trade Agreement, you would do more for Africa Trade than you would with all the things that EU and everybody is doing. Any other initiative, right? So for me, the first big thing in this whole sort of Africa trade, you know, working with each other, making the cost of goods across the continent cheaper, is to enable these guys to be able to do wallet to wallet, right? You should be able to just send money across. Andrew does a really good job with remittances. Make it easier. And there was a whole conversation about, in the previous panel, about how we make sure that the policies are defined. Honestly, it's a lot of work. Just allow these guys to do it. Let's move, right? that's one big thing is we need to harmonize these regulations across the different countries. If we are going to do this after thing, the whole PAPs, all these things that we're dreaming of doing, let's enable people that are already doing it to do it, and then we'll move on. The second thing I have is that one of the key problems with regulation, I think, across Africa and Ghana and all these other countries is lifelong regulators. What we need, and I think Ghana, Bank of Ghana and others are getting better at it, what we need is commercial people crossing over to the regulatory side, regulators crossing over. We need both sides to understand each other, right? So a good example is Richard, right? So Richard, being on the commercial side, Group IT Data Bank, then moving to NITA, means he has a perspective of what it means to sit on the other side, which means my conversations with Richard are a little less jarring. I'm not saying we don't, we shouldn't have, but when we have people on the high level that are lifelong regulators, certain conversations are difficult. You just need people who understand on both sides. And I think there has to be a concerted effort on the regulatory side to hire people at high level. We've got Kwame Opong, Bank of Ghana. And I made the case that I think there needs to be a third governor for the Bank of Ghana who comes from commercial, who sits and looks over. And Kwame is doing an amazing job, but give him a raise and put him on the board, right? And so that he is able to push in ways that he cannot do now. And I think those two distinct things help in shaping the conversations around policy. They help in just pushing things, and you have to get them from the commercial. I just want things to work. And if we can get people who also understand what it means to be on our side and be on the other side, and then it's easier for us to achieve these things. Thank you.
Right, thanks. So, Lee, let me come to you for your last bite. And wanting to, so one of the elements that Patricia mentioned was a whole literacy thing as well. So how do we foster a culture of digital literacy and trust to drive adoption of fintech, AI, and these new technologies among the general population? I know you come from Kenya, but you come to Ghana quite often. In our ecosystem where there's a lot of issues around fraud, and most of it being social engineering, how do you build that element of trust so that my grandmother in Shame, for example, would trust that she can sell her cloth, her kente cloth, using what Dario was talking about?
Good question, and thanks for it. Let me start with the trust question. So, fortunately or unfortunately, trust is earned. And for trust to be earned, it has to start somewhere, and it starts at transparency, right? So basically, as an association, as a fintech industry, we definitely need to come up with some moral code of conduct, strict guidelines, and also regulations in terms of how do we communicate with customers in terms of what are the finer details of each product we have, because one small player can literally spoil the name for the whole entire industry. Secondly, it's also thinking about how do we ensure that the platforms we are deploying are actually resilient enough, right? Because you're looking at not only at security of customers' money, but also looking at how can you best be able to evolve your system in terms of any other incoming threats that are evolving. And then, of course, we also do have to look at what can we also be able to do as fintech, because there is also a lot of engagement that we can be able to develop within our user experiences that will help a customer understand our solutions a little bit better, right? And then, of course, just thinking about it, we live in an environment whereby right now we've got super applications with the mini apps, embedded financial services, all the way to, powered by AI. So we can literally have an engagement with a customer where we are telling them you are running low on, your funds in your wallet. You've got this bill that is due maybe in the next 5 days. For you to be able to meet that bill, you either need to stop what you're doing or, your current spending patterns, or even just locks the funds that are required to make that. So there's a lot of engagement information we could be able to drive. However, we also do agree that it's bigger than all of us, because we do have a very big demographic in our market that remains, not techie savvy or not well educated for us to be able to have engagements with them. So we now start to see can we borrow the learnings that mobile money, because it did evolve to go as far beyond where everyone has gone, is that I remember when you were engaging a new customer, you needed approximately 15 to 20 minutes on average to fully convince them in terms of how the service works and basically just build that trust avenue. So for digital literacy, apart from the digital sort of things, do we also need an offline sort of experience, taking these services closer to, the users? So we have a very big ballooning youth demographic. We need to see how we can actually be able to encompass them into our ecosystems, and they play a critical role because they will be the ones to achieve that last mile conversations. Like you did say, whenever your grandmother receives money, the first thing she does is to call you to confirm it's money. Second, she's going to call either one of your cousins who is in the village or somebody else and ask, how do I cash it out? And I can bet you before the end of the day, she'll have learned how to cash it out. So how do we encompass this youth to be part of, the ecosystem, either as developers or even just as aggregators of that information?
Right. Thanks. Rashid, I'm going to leave you for last, and let me get the two men who have not had their second. So this question is going to be for Dario and Andrew. Both of you will take, and it's about partnerships, collaborations. We'll be talking about that. So what role can partnerships between fintech startups and traditional financial institutions, academia, government play in accelerating the digital financial inclusion that we seek? So Dario, if you can start, then Andrew would.
Yeah, sure. So I think in Ghana, we have a lot of very good examples. I mean, national roaming, I think was mentioned earlier on, is one of them. GIPS to enable interoperability is another good one, where you can send money from one mobile money operator to another one. And then most recently, I mean, last year, I guess, was what we have done, ECG with Hubtel and mobile money to enable payment of electricity bills. So all these things are really when different entities, private, public, and come together, and they can really build something that for the greater good. I guess there's much more we can do, and I think the two key areas where I see we can do better is, one will be, the next big thing will be credit scoring. So how can we make sure that we all have a lot of data? So ZPay has a lot of data about remittance. We have a lot of data about mobile money and many others. So how can we make sure that we use all these data so that we can provide loans to more people? Today, when Jumo does the assessment of credit and so on, they could say, look, maybe this customer, I don't want to give credit, but what if we give them more data so that they realize that actually that customer is potentially credit worth? And together with this is open banking. The government started working on a policy for open banking, and in Nigeria is already sort of live, I guess. How can we do more? How can we push open banking so that fintech, banks, mobile money can start sharing data, and as a customer, I can have the view of whatever I spend in one simple interface. I keep on mentioning this example. I'm a Revolut customer, and on my app I can see what I spend with Revolut, but also what I spend with my bank's credit card and everything, all in one app, so I have full control over my spend. So open banking, I think, will be the next big thing, and we need to be bold enough to push the institutions and the regulator to really go ahead with this policy and making it a reality.
Right. Andrew, so the same question, the role of partnerships in this revolution we're talking about.
So I'll take it from Daryl. If you look, just judging from what Daryl is saying, we've actually built the infrastructure as a country. In fact, even Africa, we build infrastructure. Today, we have entities that can terminate into bank accounts across the continent, be it NIBS, be it GIBS, be it ZIBS, Zimzam Switch, whatever. So we have infrastructure. That infrastructure enables us to collaborate, but the level of collaboration is very limited. And so I'm going to take us to a rude awakening. That rude awakening is, I think, as an ecosystem, we're not accepting that there are inefficiencies in our entire systems. Not in the infrastructure, but how we operate, the policy framework, etc. If we accept that there are inefficiencies, then we can build from there a collaborative model that will work. So I'll give you an example. We have policies, like in Ghana, today, I think as SME, you can transfer up to $50,000 without paperwork. But walk into a bank to do a $50,000 payment. It will take you maybe 5 hours in a week if you're lucky. And that very paperwork you don't need, you would have to bring it back again. So my thing is, do we have efficiency? We don't, but we have the infrastructure. So if we can accept these things, then the fintech can come in and say, I'm going to collaborate with the bank. The bank, you sponsor me. I'll bring my infrastructure to enable that efficiency to happen. If we did that, then from a policy standpoint, the regulator can come in with a thematic review and say, you know what, let's review these processes and lessen the burden, even though they don't have to, because already the act exists, the policy exists. You see what I mean? So I think that we need to take collaboration and partnership from a new layer. We need to start looking at it differently than the way we're looking at it. I think we've been looking at it from an infrastructure perspective for a long time. If you look at Airbnb, Airbnb literally disrupted the hoteling industry, if that's a word, right? Now, how did they do that? They did that because they realized that not everybody can afford a $100 or $50, $100 or $200 hotel room. So they look for different options. Today, it's a wonderful story. Look at Spotify, look at Netflix, all of these things have been done. So I think let's look at it from that perspective and disrupt, so that we see that disruption as a positive disruption and we work together to achieve that. So MTN, my good friend, I love MTN, we're best friends. I think we need to come together as the giants in the market and take it to the next level. Maybe that's what I mean by the common standards, the common term agreements. We've done it, you've done it on roaming, it's worked very well. What are the common terms agreement we can come together with that will make it work? Look at Netflix and Sky. Sky is arguably the largest pay-per-view platform in the world. Today you can watch Netflix on Sky TV. It was necessary for that ecosystem to grow. So I think that's where we are, basically, if you ask me, Ken.
Right, thank you, thanks. So Rashida, to close it, before I open 5 minutes for the audience, how can AI tools be used to tailor financial products to specific needs and context of different African populations, promoting inclusivity?
Absolutely. So when it comes to that, I think we talk a lot about engaging with this technology, using this technology, deploying it, but really, how are these individuals in rural areas of our continent going to actually use these tools? Some of them don't read, write, or speak English. And if you think about most AI tools today, you have to engage with them in a high resource language, be it Arabic, Spanish, French, English, right? Which unfortunately some of our people don't speak. We need to think broader, and we need to work hard to actually develop large language models of low resource languages. Right? When we talk about having a USSD platform where you can send payments from Ghana to Nigeria seamlessly, let's take it a step further, right? And have them communicate with each other. Imagine I am a trader in Ghana, I speak Tree. I can now be communicating seamlessly with a trader in Nigeria who speaks Yoruba, right? And when we talk about the barrier to entry, we're still keeping that human aspect of it. We're not telling our grandmothers to punch a bunch of buttons and get on platforms and learn how to do prompt engineering. We're just telling them to speak as you would, right? And then the machine does the work for them, right? So I think that that's a huge thing that we should work on. Nigeria, for instance, just recently announced that they are working on a large language model where they're going to be training it on 5 low resource languages and on accented English. That's also a huge thing that we get missed behind. How many times have you used something? You have to say it multiple times because of the way that you speak. So it's going to be able to pick up the ways that we say wata, or, you know, things of that nature, so that we're not left behind when it comes to this technology. And another thing that banking solutions can really work on is, I think we've adopted a Western model of banking. Individual accounts, individuality, my money, my money. But how many people here have ever done susu, right? How many people here or even know someone who's done that? So if we can have that in a more regulatory framework system that's organized through a large financial partner like MTN, then you're tailoring your services to actually the cultural nuances of the people and how they practice and share money.
Right.
Yes.
Thank you. So we'll take 2 questions. Okay, one. I wish I had a lady. Okay, so. Okay, one. Okay. So William has a question as well. So we'll take those 2 questions. Chief.
Okay.
Yep.
Thank you. My name is Kwame Janto. I'm a lawyer, but I'm the chairman of the oil and gas sector of the AGI. Now, let me ask the question, and the question is to all of you. Other countries have been able to stabilize the elephant in the room. You compare us to the Western countries, you compare us to the Asian countries, China, but have we been able to do it? And my question is, Dumso, power. All the fine things we're talking about, if we don't have the power, forget it, ain't going to work. So how does private individual, the private companies, the MTNs of this world, help in making sure that we have efficient power to run fintech? Right. Is it that we stand aside and say it's for government, or is it that we are the ones who put pressure on government to give us the kind of power that would help run some of the things you're talking about?
Right.
Thank you.
So, William, we'll take your question and then I'll come to the panel. And I hope I'm also allowed to go into that your power question. William, you have a microphone? Okay, so anybody wants to start with the power? Andrew, you want to do that?
Yeah. I love the power conversation. I'm going to talk about power from disruption. Let's take Cantonment, let's take Laboni, let's cut it all across the region back. Probably we'll have about maybe 1,000 generators in it. We're talking about availability of energy, right? Whatever we do, we'll have generators. If those generators can actually be put onto the grid, so that when there's a power cut, all the excess capacity can feed the grid in that same community. So that the lower housing, that the South, as we like to call in that neighborhood or community, will be able to still leverage that power. Then because it's cheap, because it's free capacity really for the state, you can localize it from a community-based approach that the community benefits from the revenue. So the revenue comes back into the community to develop the community. I think that what is happening to us is that we're scared to evolve as a people. We're just scared to evolve. Let's just evolve. Because we have the infrastructure, we have the thought process. So maybe that might solve that problem. Then from a policy standpoint, Rwanda did it. When I moved into Rwanda in the early 2000s, they had a mini-grid policy. You could set up a mini-grid if you want to. So maybe let's lessen that as well, so we feed the national grid. I just think that there are simple things we can have quick wins. And sometimes we don't even need the politicians to do that. We just need collaborative platforms, be it associations, communities, even the chiefs, so as to do that. So my piece is, let's not be scared, let's just evolve.
Right. Anybody else want to? Okay, William, you have the microphone?
Yeah, okay. So I think mine is also, I'll tag mine to that, still about the phone issue. Everything that we've been talking about, all these wonderful ideas, it requires you to have more or less a smartphone. You know, so what are we doing? What can we do to make sure that the prices are low enough? What financial models are out there? What are the telcos doing? What are we doing to make sure that we can give as many people a smartphone? Thank you.
You're looking into my eyes. Yes. Did you want to take that?
Not because I'm from Huawei and devices, but more so because I'd like to basically frame it from a different view, basically seated at the center of what my colleague on the left said, and also the evolution story, and also just acknowledging where we are right now. Of course, in terms of affordable devices, there's a lot that can be done, but I can tell you it all comes from regulation. I've been told not to mention too much about Kenya, but right now the Kenya government is crafting something with Safaricom, whereby the goal is to develop a smartphone that is less than $50, and they've been able to do it. I think they've got right now more than 1 million devices being distributed in the market. Only government can power these sort of things. Yeah. We do not have the capability. Second part is also on electricity or power, as it mentioned. We cannot solve this as a fintech industry, regardless of how well we want to do it. So the question is, how do we align ourselves? Because one thing is simple. Mobile money has gotten to these people even without electricity. So we need to learn from that sort of exposure, because there is an agent. The agent can always be able to serve all these sort of customers even without electricity. You've talked about the device. The question is, are we blocking ourselves by thinking it's only a smartphone that can access fintech? While in China has been very disruptive, you can walk into any shop, any kiosk, and you're able to transact purely by biometrics, right? The phone just holds an account number or a virtual ID. In South Sudan, where there is neither power, no electricity, nor even internet. It's actually a pose and your face. And that's all it's required for you to be able to transact. So we might need to be disruptive in our current architecture of how things work, as we hope, plan, and pray that the government also, does come to the center.
Right. Thank you very much. So, okay. So I'll take that question. And then as I prepare to do that, I'm going to come back to the five of you. My question is for you to look into the crystal ball and tell us what trends you see in the efforts of shaping this equitable digital future for Africa. That's what I would want to come to you to close. Yes, madam.
Hello.
My bits on par. Okay. My chairman is looking into my face. She can take it, but I'll say it. Please.
So I have a question. My name is Lala Pedre. In what ways can companies like MTN and ZPay collaborate with educational institutions to enhance the integration of practical financial skills into academic curricula, preparing students for the demands of the modern economy that we currently face in Ghana, in countries like Ghana, Nigeria, and across Africa?
Right. So Dario and Andrew, this is for you.
Yeah, so funny enough, as MTN Group, we started a year ago looking at what are the new e-verticals where we want to operate, where we believe we can play a role. And so one of them is health, and you're going to hear a lot here in Ghana because Ghana will be the pilot market for that. But we're also looking at education. So we are doing some work in South Africa and in Nigeria exactly on ed tech. So how can MTN with mobile money, with data bundles, help some of the ed tech companies to really grow and have a bigger impact. So there will be some announcements soon, but I'm sure that that's going to be is a key area for us for the future. And again, it's going to be around payment, but also around facilitating anybody to really be able to do a training, follow a course, and up to a point of a certification. So there's going to be some announcement pretty soon on this topic.
Right. Andrew?
And thank you. That was a lot of English. I get intimidated by that. Let me say this. So we decided 3 years ago to go into academia. So we partnered with University of Ghana Business School. We've actually built an innovation hub at the business school. And the objective with that is to help bring ideation from academia into industry. Because, I mean, granted, this new revolution we're in will be driven by the youth. And I think we all admit that we're more youthful today in Ghana and Africa than anywhere else. In fact, for the first time, Africa is going to pose in many countries, and it'll be largely driven by the youth in terms of decision making. So we think that if we can take the ideas and help them to monetize it, it will be a great thing. That's our first thinking into that. As we go along and as we get into campus, I'm sure we'll figure out how to bring education more and more into that space, if I may answer.
Right. Thanks. So just want to close. Rashid, I will start with you. Your closing thoughts looking into the crystal ball.
I think looking into the crystal ball when it comes to artificial intelligence and across all sectors is we have to stay ahead of this race. Like I mentioned, certain countries like Kenya and Egypt, they've already started their national framework in 2018. So we're already many years behind. It's really important that within your organization, you become an advocate for these technological advancements, for using these tools, using them effectively. There are courses out there. I think it's very important for leaders and organizations to incentivize and prioritize continuing education in this field. Even for those of us in this space, you find out about things, all the time. The system is changing all the time. I mean, ChatGPT just launched a brand new model that's about to completely change everything that we already know. So it's very important that we don't just come to these conferences and hear about AI and talk about it. It's time to actually be practical in our advancements. It's a time to actually think about ways that we can really tailor AI to our context. I believe someone said in the previous panel, but are we just going to be pure consumers? Because we have been for a long time, right? Or are we going to be active architects in navigating and developing these very vast systems? Thank you again.
Thank you. Daryl.
Yeah, so I want to touch on what Rashida said earlier on around the work that is happening in Nigeria around the new language model, and I just hope it's also going to cater for Italian accent, so I will be able to. It will work for me, because sometimes Alexa doesn't get me. So, no, but talking about this is 2 days ago, 2 days ago, OpenAI announced the new ChatGPT 4o, and that can actually help with translation and so on. And immediately, the shares of Duolingo, that is a language learning app, plummeted 5%. So that means that maybe in the crystal ball is that language is not going to be a barrier anymore. That doesn't mean that I still believe we still need to learn how to speak other languages, but hopefully it will enable many people in rural areas from Africa to talk to somebody in the US without the need to learn and without any barrier.
Right. Thanks. Ethel?
Right. I was going to say with what's happening in Nigeria, it's what happens when you have somebody who's been on the other side actually become minister.
Yes.
Well, okay, so two sets of things. I wanted to give the numbers because I actually estimated and crunched the numbers, and back to the regulatory question, on what it would look like if all MTN and Orange, and I think a third party, all the opcos they had across Africa did wallet to wallet. So that would, if we looked at it as a 5 to 10% reduction in, 5 to 10% reduction in the cost of cross-border trade, that we would be estimating something from 70 billion to 140 billion trade volumes, and we would be looking at something like 0.25 to 0.5 increase in GDP. So these numbers, I mean, these are estimates, these are numbers that we sort of crunched because I was using it to write a white paper, but these are very real things that will happen if regulators become enablers, not blockades. Okay, now looking into the crystal ball. So we're never, I think in Africa in the AI revolution, we're not going to have first mover advantage. I think we're going to have to plan for what it means to be the second mover and what advantages we bring to it. I think that's what we need to be thinking. I think there is, they are leaving us, AI, they're leaving us, and we're worried about that. But we're not going to have that first mover advantage. So from a strategic point of view for policymakers and for regulators, what is our distinct advantage? What is our second mover advantage? And somebody alluded to the fact that we are the most youthful continent, right? That's one of our advantages. We need to start looking at the AI, the sort of future tech conversations in terms of, so people are going on ahead of us. What do we have that will enable us to be better, stronger, hopefully overtake? I don't want to use the word leapfrog because tech, we use leapfrog a lot, but overtake or at least stand on par with the people that have come before us. Thank you.
Thank you. Lee, crystal ball.
Okay, I'd say we definitely need to accelerate DPI adoption and DPG, and not just DPI, but good DPI. As you've seen, we are heading into a credit inclusion phase, right? And with this, there is a lot of data that we could be able to leverage on from each other, as well as the government just being a stakeholder of some of the key information that is required. So that will definitely accelerate the pace at which we are going to evolve and reach the underserved and also the underbanked. Crystal ball, I think we're heading into a very interesting time where it's not just technology that is going to disrupt our fintech business, but also a giant is awakening, and this giant is basically banks. Traditionally, they were always happy with serving the high-value customers, but of late, they've decided you're eating too much of their lunch, so they do want to come into that space where they want to serve this because it's basically eroding their current accounts. And a couple of things we need to look out for is that transactions are going to become free. P2Ps, cash-ins, cash-out, all these sort of vanilla transactions will become free. So even these other sectors which have remained slow in terms of adopting fintech, agriculture, insurance, etc., we might now need to consider how we get into them because the other part will definitely disappear very fast. So
right,
that's my take.
Thanks. Andrew, last word.
Thank you. So I'll take it from Ethel and then my colleague next door. Yesterday, I read a report from Roland Berger that says that global payments would increase to $3.5 billion in volume a day. Africa is estimated to be 48% of that. If my math is correct, and usually it's not, it means on a monthly basis, Africa could easily be doing about 50 billion. But these monies that we're talking about are sitting at the bottom of the barrels. They've not come up yet. They're in the third economy, if not even the fourth economy of most African countries. Okay, so looking into the crystal ball, we're talking about Africa free trade. We need cross-border. We need to open the borders. But the borders have been open. They've been open for a long time because they never really existed. If you take Sierra Leone, if you take Gambia, if you take Conakry, Guinea-Conakry, the Mano River, they're common types. They understand each other. They migrate. They move in and move out on a weekly, monthly basis. Even in our own environment, we do that in West Africa. Between Togo, Benin, they move in and move out. Between Ghana and Nigeria, we move in and we move out. I think what's going to happen, Ken, over the next 3 years is simple. 3 things I'm betting on is AI, fulfillment. Fulfillment would include payment. It's going to be very big. What do I mean by fulfillment? Amazon is nothing without fulfillment. Amazon is just a big brand if it doesn't have fulfillment partners. Africa is going to go into big fulfillment. You're going to have major fulfillment players on the continent who will move goods. It's going to be very possible, maybe even 5 years from today, that I can order a McDonald's and there's no McDonald's brand in Ghana. Somebody just puts the burger on and wraps it with a label, and fulfillment will deliver it. Whether global leaves or not, that's what I'm betting on. So for the next 3 years, I feel like West Africa will open up so much on the fulfillment side. It will be easy for me to buy flowers in Kenya and have it here the next morning because the flowers will be sitting in Ghana. So that's one. Second thing, AI. AI, as we've been talking about, and Rashid, I like what you say a lot. AI is what's going to change everything for us, but it's the thing that will kill us. I think that people in this room, people in these countries will get up and build AI around consumer behavior so that we can interact. Because, I mean, think about it. People have how many people have WhatsApps that you know they don't speak English, but they send you a message in English? It happens already. It's happening. So we just need that AI to make that English complete so we can understand it, or whatever language it is. It means that my grandma can send me a message, my Chikwame, to say, and I'll get it in English if I speak only English. So I think that AI is the next thing too that will be propelled over the next 3 years. I'm looking at it on consumer behavior, service delivery, making sure that we have optimal service performance. So these two things. Then on the payment side, I see us opening our borders more. Ethel talks about the fact that it's become necessary for regulators to just allow it to happen. Suppose with all these outbound approvals coming through from various markets, of course, if you look at the Francophone market, these are bilateral markets. It's already open. You can do outbound. So that's what I'm saying, that we need to find the inefficiencies that exist around the infrastructure we built so that we can make that inefficiencies disappear. And that's what will happen over the next 3 years, Ken. Thank you.
Thank you very much. A round of applause for my partner. Big round of applause. So really there's a hope for the future. Huh? So it looks like what happened at Pentecost, where they could hear everybody's language, was actually just AI waiting to happen. You know? So that's going to happen. You know, that's really going to happen. And to come to your question, I would answer it, but I'll tell you, a lot of the issues have to do with us. Yeah. Even the issues around net metering, for even solar. Why are we engineers preventing that from happening? How is it that we decide that you want to help get the telcos and the fintechs to be part of it? If we bring the panels duty-free, when we bring the batteries and all of that, the duties are on it. So if we really want to deal with the issues, one of the challenges in our country is the fact that our whole electrification thing has a lot of inefficiencies in it. That's why I like Andrew's thing. When you decide that you're going to let Akosobo supply power to the north, when you know that by your electrical engineering, you're going to drop a lot of voltage and the losses are going to be on that. You know, so we need to start as citizens, start questioning some of the things. Some of these things are populist. You know, and we need to stop it. We need to start taking pragmatic solutions that resolve our problems. The mini grids, let that happen. You know, so I'm not a panelist today. I'm not a panelist today. But again, one of the last things, as we talk about all of these things, trying to take DPI to all the people, how are we going to solve the problem where $6 million is spent on fixing fiber cards? How are we going to fix that? So that instead of using that 6 million to extend fiber to Chama, my village, we spend it in the 3 fixing fiber cards. How are we going to resolve the issues where for every road that you build, you cut all the fiber? How are you going to do that? So we need to start staring some of these things in the face and dealing with them. Richard will tell you how much NITA is losing to fiber cards. We need to fix some of these problems. And we need to start taking some of these issues and dealing with them. So the partnerships are going to be important. So I'm hoping that after we've done all of this, between government, within the operators, and academia will all come to the table and try finding solutions to our problem. Let's start learning to collaborate, and it's really going to be important. Our regulators should stop wearing the hat that I'm regulator. Let's bring grey matter into the room. So when we sit to discuss, we discuss it from a point of knowledge, not just because you are a regulator or you are a policymaker. You know, let's all come together. Let's get our customers as part of the conversation. So when you're designing the products for them, you are able to design it to fit them. How would my grandmother, again in Chame, be able to take the phone and not go and give it to somebody to go and catch the money for him? How would she be able to speak to the phone and be able to withdraw her money, do her transactions? Those are the things that I am hoping that the partnerships, the collaborations will be able to do. So to close, MT4D that is happening under the auspices of the 3i Summit, we're grateful for the opportunity for you to engage with us. MT4D 2025 will happen next year, and I'm sure 3i Summit will also happen next year. We'll be seeing you. But the most important thing is that the things that we've come to discuss, let's try and as much as possible to do only one. Only one. If all of us will attempt to fix one, do one, collaborate one, start something so that by the time we come next year, we'll be reporting what we've been able to do to ensure that the things that have been said that are in the crystal ball actually happen. So thank you all very much. We thank our sponsors. We thank Bank of Ghana and all the organizers of the 3i African Summit. We thank our speakers and everybody for making this happen. Thank you very much, and God richly bless us all. So we'll take the picture.
All right, so ladies and gentlemen, as they take the pictures, we would like to say we are very grateful to you as an audience. You have been truly, truly, truly amazing. And 20 speakers led by our 2 keynote deliverers, as well as 3.5 hours of insightful conversations around digital public infrastructure. And I'll still go back to what Engineer Madam Patricia Bunai said: implementation, implementation, implementation. We'll see you next year at MT40 2025. Thank you so much.
Africa is the cradle of civilization.
The lady's talking to
My name is Ethel Cofie, and